IREN stock had a rough Thursday, falling sharply by $6.15, or roughly 9%, to close the session at $61.83 per share. It was a decisive red day, the biggest single-session drop the stock has seen in weeks. For a name that's been on such a remarkable run lately, the reversal stood out. It left many investors asking the obvious question, what happened? And more importantly, is this the start of a breakdown, or just a temporary flush out in an otherwise strong trend? At first glance, Thursday's move looks dramatic, but it's not entirely unexpected. IREN has been one of the market's most explosive mid-cap growth stories of late, rallying more than 50% from its early month lows on the back of growing optimism around its AI cloud pivot, massive GPU deployments, and long-term infrastructure advantage. When a stock runs that fast, volatility becomes part of the equation. Momentum attracts traders, but it also invites quick profit-taking when sentiment turns. And that's largely what seems to have unfolded today. There was no fresh company-specific news or negative headlines from IREN that could explain a 9% drop on its own. The company hasn't changed its guidance, cancelled any contracts, or signaled operational issues. Its most recent press releases continue to highlight strength, the expansion of AI cloud capacity, new multi-year deals deploying Nvidia's Blackwell GPUs, and long-term revenue projections that remain on track. In fact, the fundamentals have barely changed since earlier in the week. What changed was the mood of the market. Thursday was a risk-off day across the board. The NASDAQ finished lower, with several large-cap tech and AI names, including Nvidia, AMD, and Supermicro, all pulling back sharply. Renewed headlines around US-China trade tensions, chip export restrictions, and general profit-taking across the semiconductor sector set the tone. When sentiment shifts like that, high-momentum stocks such as IREN tend to feel the heat the most. The same speculative energy that fuels rallies can just as easily accelerate the declines when traders rush for the exits. Adding to the pressure was a wave of profit-taking. After a series of powerful green days, many short-term traders likely locked in gains. It's common to see sharp, single-day sell-offs in stocks that have gone nearly vertical, especially when there's no new catalyst to push the story forward immediately. IREN has been trading with elevated volume and momentum indicators for weeks. A pullback of this size is often a way for the market to reset positioning, shake out leveraged traders, and allow new buyers to step in at lower levels. There's also an element of capital structure sensitivity in play. IREN's recent $1 billion convertible notes offering remains fresh in investors' minds. While it's a strategic move aimed at financing GPU purchases and data center expansion, some investors may be concerned about potential dilution down the line. Convertible note headlines often spook traders, even when the terms are favorable, in this case, a 0% coupon and long-term maturity. But as we've seen in other growth stories, financing moves like this are often misinterpreted. They're not signs of weakness, they're signs of ambition. The company is raising capital precisely because it has credible, capital-intensive opportunities ahead of it. Technically, today's decline also coincided with a test of key support levels. The $65 range, which had served as a short-term floor during the previous consolidation, gave way early in the session. Once that level broke, algorithmic selling and stop losses likely accelerated the move. Momentum unwound quickly, pushing IREN briefly toward $61 before stabilizing near the close. The selling volume was heavier than average, which suggests short-term traders capitulating rather than long-term investors exiting. Historically, these flushouts tend to mark short-term exhaustion points, not the end of a trend. Even after Thursday's drop, IREN remains up significantly on the month. The stock is still trading well above its major moving averages and continues to display strong relative strength when compared to other AI infrastructure peers. That's an important point. If this were a fundamental breakdown, we'd likely see panic selling or negative news flow accompanying it. Instead, what we have is a technically driven pullback within a broader uptrend, the kind of move that often creates opportunity for patient investors. Let's revisit the bigger picture for a moment. IREN continues to build out one of the largest AI compute platforms in North America. The company's AI cloud segment is scaling rapidly, supported by new contracts worth over $225 million in annual recurring revenue. Management has guided towards surpassing $500 million in ARR by early 2026. Those are substantial numbers for a company that, not long ago, was best known for its Bitcoin mining operations. The pivot toward AI infrastructure isn't just talk, it's visible, tangible execution. And that's what makes this pullback intriguing. There's no evidence that the AI cloud narrative has slowed down. GPU deployments are ongoing, client utilization is ramping, and the company's power-efficient data center infrastructure remains a strategic advantage. These fundamentals don't evaporate because of one red day. In fact, when a company's long-term story remains intact during a short-term price drop, it often reinforces conviction among serious investors. Another perspective worth mentioning is the interplay between short interest and option flow. Recent data showed elevated call volume in the $70 to $80 strike range, signaling bullish sentiment going into mid-month. Today's decline may have forced some of those speculative positions to unwind temporarily, leading to increased volatility. Meanwhile, short interest remains modest, meaning there's not a large base of bearish conviction betting against the stock. If anything, today's pullback may have reduced froth in the options market and set the stage for a healthier base to form. From a technical standpoint, the zone between $60 and $62 will now be critical. That's roughly where the stock settled after Thursday's close and where buyers stepped in earlier this month. If IREN can stabilize around this level and begin to see renewed accumulation, it would confirm the idea that this was a simple correction in an ongoing uptrend. On the other hand, if the stock continues to slide with expanding volume, we could be looking at a deeper retracement back toward the 57 to 59 range. But for now, the evidence suggests stabilization rather than panic. It's also worth highlighting that the market itself appears to be rotating defensively. When interest rates, inflation data, or geopolitical headlines dominate the narrative, investors tend to take profits from high-growth names to reduce exposure. That doesn't mean those companies are suddenly less viable, it just means capital is moving temporarily. The same dynamic has played out countless times across past bull markets. The stocks with the strongest fundamentals usually recover fastest once sentiment normalizes. IREN's unique blend of AI infrastructure, energy efficiency, and long-term contracts positions it well for that rebound. For long-term investors, days like this can actually be healthy. They clear out speculative excess and reset technical indicators that may have become overheated. They also provide opportunities to accumulate shares at a discount when the underlying thesis remains unchanged. The key is always distinguishing between a story breaking down and a stock shaking out. In IREN's case, nothing in the company's fundamentals or strategy appears broken. The business is still moving forward, but the stock, like all momentum plays, needed to exhale. Looking ahead, there are several catalysts that could help the stock regain traction. Investors will be watching for updates on the deployment timeline for the Blackwell GPU fleet, progress on additional AI cloud contracts, and early revenue recognition from the new deals already signed. Any positive news on these fronts could quickly reignite momentum. In addition, as macro conditions stabilize and risk appetite returns, IREN could see renewed inflows from institutional investors seeking exposure to AI-driven infrastructure plays. In the meantime, it's important to keep the recent performance in context. Even after this 9% pullback, IREN remains one of the strongest performing mid-cap tech names over the past quarter. It's outperformed both the broader NASDAQ and the crypto-linked mining peers by a wide margin. That relative strength doesn't disappear overnight. If anything, it reinforces the notion that this is a leading stock in a leading theme, one that's temporarily caught in the market's broader turbulence. The next few sessions will tell us a lot about how solid the current floor is. If IREN can stabilize above $60 and reclaim the 65 zone, it would confirm buyer support. Watching volume will be key. Light selling followed by heavy buying on rebounds typically signals institutional accumulation. A bounce from here would also keep the stock within its larger ascending channel, which remains intact despite today's drop. Long-term investors might see this as a test of conviction. Short-term traders may see it as an opportunity to trade volatility. But in both cases, it's clear that IREN's story remains relevant. It's one of the few mid-cap companies bridging two of the decade's most powerful themes, digital assets and artificial intelligence. Pullbacks like this come with the territory. What matters is whether the company continues to execute, expand capacity, and secure contracts. So far, it's doing exactly that. In summary, Thursday's 9% decline wasn't pleasant, but it wasn't disastrous either. It looked like a classic flushout, a technical correction after a strong run, triggered by macro headwinds and short-term profit-taking. The fundamentals haven't changed, the contracts are still in place, and the company's growth trajectory remains intact. The long-term narrative is still one of transformation and scalability. For those watching IREN closely, the key takeaway is this: volatility doesn't equal weakness. Sometimes it's simply the market catching its breath before the next move higher.